So not last year for 2023, the awarded value was 97 billion for Saudi against a pipeline of 1.5. And that pipeline has roughly stayed at that value for the last maybe 18 months. It moves slightly up and down, but the overall value seems to be that more projects are coming online or announced anyway. And obviously the estimates of those values are done by MEED Projects, who we reference in the report. And yes, so if you look at the value of that pipeline, I think at the moment around about 5% is under main contract, which is just about to be awarded to a main contractor. So that means the remaining 94, 95% is in design phase, feasibility, or pre-qualification phases. So that might mean that they may not get awarded for another 2, 3, 4 years, I believe MEED Projects tracks up to. So it's not to say that's all looking to be awarded in the next 6 months or the next 12 months, because that's not going to happen. That's not happening. So that's just looking at the value of what's being awarded against the pipeline. So very strong pipeline, which maintains between around about the 1.5 trillion, according to MEED Projects. And then we're tracking the value of projects awarded. And I think for Q1 this year, it was around about 30 billion so far, in Q1 anyway, for Saudi Arabia.
This is the 966.
Hello and welcome to the 966. I'm your host, Richard Wilson, episode number 134. As is widely known, Saudi Arabia's enormous commitment as a part of its Vision 2030 plans and its drive for economic diversification has resulted in just a booming construction and contracting market, widely understood to be the largest, or soon to be the largest, construction market in the world. I thought it was time we learned a little bit more about this. So delighted that Laura Morgan, who is head of market intelligence for JLL, a globally renowned and long-established real estate and investment management firm, will join us today. One of the things she'll say is there's a $1.5 trillion pipeline in terms of construction projects ongoing in Saudi Arabia, which is remarkable and notable. So this is a good one. If you haven't had a chance to listen to episode number 133 with Dr. Jennifer Peck, it was on how working women are changing Saudi Arabia. Another episode just chock full of insights and really interesting perspective and observations from someone who really knows the topic well. This episode, Saudi Arabia's booming construction sector, with Laura Morgan of JLL. Enjoy. Hello and welcome to the 966, episode number 134. I'm your host, Richard Wilson, and we are delighted to have with us today Laura Morgan, Market Intelligence Lead, Middle East and Africa for JLL, also known by us old-timers as Jones Lang LaSalle, a leading global commercial real estate and investment management company. Laura, thank you. Thank you for joining the 966 today. I'm really looking forward to our conversation.
Thank you for having me. It's good to meet you.
Yes. The catalyst for our connecting was JLL's, I'm going to stumble on that repeatedly, my apologies. JLL's latest KSA Construction Market Intelligence Report. And I want to dive into that. But before we do, can you tell us a little bit about JLL and JLL in the region?
Yeah, absolutely. So we are, as you mentioned, we're a real estate company. We focus on the end-to-end across projects, and we offer services from initial development, assessments, and through our strategic consulting team, all the way through to project delivery and program delivery. We're based in the major markets globally, but looking at the region itself, we've got offices in the UAE, in Saudi, in Egypt, we're serving high profile, amazing clients that are working on some really exciting schemes at the moment.
It's an exciting place to be, for sure. So what's your background? You spent a lot of time in AECOM.
Oh, I did. I was with them for about 15 years in the UK, and I came out to Dubai with them. And then I moved across to JLL 3 years ago and picked up more of the market intelligence delivery, and also working across Projects as well. So that's my background. I was in the UK as a trainee from 18, 19, and then I've been out here in the UAE for 11 years. Prior to that, I had done 6 or 7 years in the UK as well. So yeah, it's been an interesting move, but it's very busy here, so it's always exciting.
Well, and that gives you a really useful and worthwhile perspective in that you've sort of seen the Emirates, UAE, go through this expansion and these transitions in Saudi Arabia, and you've seen Saudi Arabia now in the midst of it, sort of coming along behind, but on a grand scale. So you have some perspective for what's ongoing in Saudi. So let's segue into JLL's KSA Construction Market Intelligence Report, which was for Q1 2024. I'm going to quote quickly from it. Quote, set for a potential 2.1% GDP growth in 2024 and 5.9% in 2025, Saudi Arabia's progress on numerous Vision 2030 gigament projects and infrastructure developments ahead of the upcoming Expo 2030 has cemented the kingdom's position as a leader in construction activity regionally and globally. Can you talk a little bit about this intelligence report and maybe start with the methodology, because you tied up with MEED Projects. We think MEED's fantastic. Maybe tease that out for us a little bit.
Yeah, that's fine. So we focus on the key markets where JLL obviously have offices and the markets that we're looking at in the MENA region. So we prepare the reports for KSA, for the UAE and for Egypt. And whilst our research team are fabulous and they do brilliant work every quarter in publishing the real estate market updates for the same, for Cairo, for Riyadh and for Dubai and Abu Dhabi, this is focused specifically on the construction sector itself. So we try and issue a publication twice a year across the region, but also country specific as well. And we just try and capture the movement, the update, any key changes in the markets, which we've seen quite considerable impacts over the last 4 years, and the impact that's having overall to the construction sector, whether that be stability, demand, supply issues, an uptick in prices that we're seeing, anything like that. And we use multiple sources for the report. We use MEED Projects, as you've mentioned. We rely on Oxford Economics for the macroeconomic data. And yeah, it's just a case of capturing any key updates in the market. We speak to clients. We've spoken to the contracting sector to gauge insights and opinion that way as well. We've included that in some of our reports in the past. And then we use our own internal data to capture key rate changes and obviously our benchmarking, which our clients are always very interested in every time we update those and release those to the market as well.
And with regard to this Q1 2024 report on Saudi Arabia, what were the major findings?
The major findings we reported up to Q1. Q1 of this year, and we're just looking at the projects market overall. So what we're really trying to focus on at the moment is the high value pipeline, which we track from MEED Projects, and understanding the share between the key players in the MENA region, which is the UAE and Saudi, and looking at actually what's being awarded, the impact that's having on the supply chain, the contracting sector availability. Clients want to know, what's happening with construction inflation, what we're seeing in tender price inflation, what are the key commodities doing at the moment. So we're really trying to focus on tracking, are we seeing any movement to the value of projects awards, giving an indication of how busy the market is? Are we seeing a change to commodity prices? What does that mean for construction materials in terms of rebar being a key item, structural steel, concrete, for example? We try and track those based on the data that we receive between the reports as well to give an indication on the movement in the market. So there has been some signs of stability. Commodity prices in general have increased, especially over the last 6 months. We've seen an uptick towards the end of last year, but we have seen a slight change in construction material prices as well, not to the same degree, and also tracking freight, for example, and looking at the global freight index, because in this region we have a significant reliance on the imports of materials, and we know that has had a significant impact following the pandemic. So yeah, the key findings, the KSA had a very strong year last year in terms of the value of projects awarded. It was the highest value that MEED projects have recorded at 97 billion, which gives you an idea of the way that the projects are progressing there in the key giga project programs. But we are still looking at a very high value pipeline, and the change between, or the difference between the pipeline to what's being awarded is still actually quite low, which means there's a lot still to come on into the market, and we're looking at things like capacity and reporting on any changes to where we see skilled labour demand and supply, and any significant impacts there may be in terms of internal or external risks in the region.
Well, for our listeners, I wanted to share some tidbits from the report, and you touched on that. That was really helpful. So I guess in the pipeline of unawarded Saudi construction projects, that's approaching $1.5 trillion. I guess Saudi Arabia accounts for 39% of total MENA pipeline value. So this 1.5 trillion is 39% of the total MENA value. And this is where we get down to the construction. Within that pipeline, construction sector represents roughly 62% of that 1.5, about $950 billion. I guess leisure and hospitality sectors accounted for 23%. So roughly, a lot of the remainder. Can you distinguish between awarded and unawarded projects? You sort of alluded to that, and so you have this huge, projected pipeline, and then you have actual bids put out and accepted and that sort of thing. Where do we stand on that relationship?
So not last year for 2023, the awarded value was 97 billion for Saudi against a pipeline of 1.5. And that pipeline has roughly stayed at that value for the last maybe 18 months. It moves slightly up and down, but the overall value seems to be that more projects are coming online or announced anyway. And obviously the estimates of those values are done by MEED Projects, who we reference in the report. And so if you look at the value of that pipeline, I think at the moment around about 5% is under main contract, which is just about to be awarded to a main contractor. So that means the remaining 95% is in design phase, feasibility or pre-qualification phases. So that might mean that they may not get awarded for another 2, 3, 4 years, I believe MEED Projects tracks up to. So it's not to say that's all looking to be awarded in the next 6 months or the next 12 months, because that's not going to happen. That's not happening. So that's just looking at the value of what's being awarded against the pipeline. So very strong pipeline, which maintains between around about the 1.5 trillion, according to MEED Projects. And then we're tracking the value of projects awarded. And I think for Q1 this year, it was around about 30 billion so far, in Q1 anyway, for Saudi Arabia. So
you've seen extraordinary infrastructure projects in the Emirates. And now we're seeing this, many people say, sort of the largest sort of construction initiative in the world at the moment, certainly in emerging markets. What's driving this expansion and the construction activity awards?
I mean, it's interesting because, especially for the UAE, for example, if we take them, 2019 before the pandemic was quite a quiet year, or a slowing year, perhaps. When you look at the value of projects awarded, we definitely saw a dip. And then we start to, hear and see of the vision programs being announced. So Dubai, Abu Dhabi, or the UAE as a whole have got their vision programs. And then obviously Saudi have announced theirs as well. And the purpose behind them is the economic diversification away from the oil sector and looking at other ways to generate economic activity in both the UAE and KSA. And, we're looking at the Public Investment Fund, who have, the umbrella of all those major projects. And it's interesting to see that's now coming to fruition. We're looking at some of those projects that have been announced or being awarded under PIF and under other key developers in Saudi. And obviously it's mainly from the announcement of the Vision 2030 program and the targets that they're trying to achieve in bringing in more tourism and generating an income outside of the oil sector.
So again, I strongly recommend this KSA Construction Market Intelligence Report. Part of this report notes that this growth, ongoing growth in KSA, has occurred despite challenges such as persistent inflation, elevated interest rates, geopolitical tensions, and the potential impact of the U.S. presidential election in Q2. How does JLL assess geopolitical risk in this is a volatile period in the region?
It's a good question. I know as a team in project and development services, when we're looking at, we're advising our clients or we're looking at key projects, and obviously we take those into consideration. We can assess those as risks. We can assess those and try and understand the financial impact or the impact that will have to the supply chain, for example. So it's a case of monitoring and increasing transparency, the need for more data. The more data we have obviously gives us a better reflection of the market. And we have, internally we track tender price inflation, we're tracking the commodities. So it's really trying to understand when there is a shock or an impact that we've seen a lot of in the last 4 years, that looking at the trends that then has to things like the commodities, looking at what that does to the contracting sector, whether there's perhaps a slight reluctance or, clients perhaps holding back a little bit because of the uncertainty in the market, or the complete opposite. And actually they're steamrolling forward, and we're seeing these programs that are just going and going and going, and they're doing it in spite of what's going on in the rest of the world, because, it's such a strong market here.
I want to emphasize that, in spite of what's going on, and in spite of declining oil revenues, or certainly stagnant, and they've run a deficit now for six quarters in a row, I believe, and they anticipate deficits in 25 and 26 as well. So it is maybe in contrast to other parts of the world. A recent market survey. Well, before I get to the next one, I'm interested, and I'm going to take a left here just slightly. In terms of, everything you're doing is data driven. You have to have access to data. Is it easier to get reliable data in Saudi Arabia now than it was 5-10 years ago?
That's an interesting question. I wasn't actually looking at the Saudi market 5 or 10 years ago, so it would be interesting to hear other people's opinion on that. But I think there's definitely more data available, and I think because everyone is so interested in it, I think it's encouraging people to be more transparent and to release that data. The government themselves, they have a very good website which publishes key data metrics, which I use on my reports as well. So I think it's definitely improving, and I think obviously the more and more projects that we see, come to light, there'll be more data around those as well. But the need for sharing and being transparent, obviously, especially for consultants, it very much helps us when we're working on these programs with our clients to share data.
My experience, and I've been sort of mining information about Saudi Arabia for over 3 decades now, is so vastly improved. There's, just much more available, better transparency in many ways. Back on track. A recent market survey, Turner & Townsend, finds that Riyadh has become the priciest city in the region for construction, with costs soaring to $2,593 per square meter due to rapid growth. Now, the JLL's market intelligence report speaks to this, and it points out there's a decline in employment levels in the sector as companies seek to manage costs and cash flow. What are the challenges this sector is facing in keeping up with the pace of construction?
I mean, it's a good question. I think, and I have seen Turner and Townsend's report where it references the rate that they've given for Saudi or Riyadh, and it's interesting. But I think I sort of thought about that for a minute and tried to understand what was driving that cost change. And I think understanding that perhaps specifications have changed over recent times, and perhaps we're seeing a greater or a specification change is definitely having an impact on that too.
And by specifications, you're talking about regulatory requirements and other building codes.
I don't necessarily know whether it's linked to building codes or if it's just we're seeing a greater specification or a change in the model of what we're seeing coming online to meet perhaps international demand of real estate. So it could just be a factor of some of the resorts or the 5-star hotels that we're seeing being constructed now. That would obviously be a change.
Certainly in the travel area and the hospitality area, much of the investment at the moment has been at the high end luxury end. But obviously, residential construction in Riyadh is racing along. It's not able to keep pace right now. Last year, Saudi Arabia's public investment fund took significant positions, totaling $1.3 billion in 4 Saudi contractors: Nesma, Al Saif, Al Bawani, and Al Mabani. And this is part of an effort to build up local contracting capability. In your opinion, how is this effort progressing? This is an important goal for Saudi Arabia, to have the ability to meet these construction and contracting demands with as great a percentage of involvement from local companies as possible.
Yeah, and I mean, we've taken quite a positive stance on this because we obviously, their interest in position that they've been able to create. And I think the idea behind creating greater opportunities and creating more investment for those contractors to obviously help improve the market and increase their capacity and their offering, it's very positive. There is still perhaps a shortfall, especially in with the MEP contractors in particular, and there is still a huge demand and perhaps gap in what's available in terms of the skilled labour force in Saudi. Although we're seeing that still globally, I think that's still an issue following the pandemic anyway. But it's definitely, it's very positive that we've seen that investment, and it will definitely go some way into helping them meet and achieve their vision goals and the programs that we're likely to see in the next few years.
I thought it was interesting. Just this last week, Diriyah company announced that a record-breaking construction contract, $2 billion, was taken by Saudi's Al Saif engineering contracting company, one of the companies that PIF took a position in, and the China State Construction Engineering Corporation. This is the kind of thing, obviously, Saudi Arabia, PIF, and leadership want to see. And you can have, Al Saif has been great for a long time. And this little bump lets them to be, and others be champions for the sector for Saudi Arabia. So I'm really curious, Laura, drawing on your experience with AECOM and JLL, what are the smartest construction and contracting firms doing to access this booming market?
I think it's trying to set yourselves apart and understand the differentiators that we can offer our clients, serving them the best value, giving them the best value, understanding what the gaps in the market are, but being very heavily driven by digital, and you mentioned it earlier, data as well. So within JLL, we're looking very much at the end-to-end services of projects, and we've invested very heavily in tech at the moment, which I think we're setting ourselves apart from our competitors in the way we're doing that. So I think it's a case of understanding the market needs, understanding how important data is for clients, for developers, and looking at ways that we can introduce tech and data into our service delivery.
Now, I'm a bit of a homer, and I'm here in the U.S. You're calling in from the U.K., where you hail from. But I'm particularly interested if there are any U.S.-based firms that you feel have positioned themselves well and are really approaching the market in an intelligent way. Again, okay, I'm a U.S. corporate champion.
I know.
Tell me good things, Laura.
I think it's interesting because there's obviously so many opportunities out there. I don't know any specifically, or I wouldn't be able to mention them name by name, but I think there's definitely a prominent market available there, and you're definitely seeing, the opportunities arising for these companies to set up there. They're really encouraging head offices to be placed, or headquarters to be placed in the likes of Saudi, for example. And, as I mentioned, the scale and size of the projects that we're seeing in the market now, there is definitely, everyone can have a piece of the pie. There's definitely a lot to go on there. And you can see the draw, especially where we've seen perhaps a slight slowdown in the likes of Europe and maybe even the States and Asia for China, for example. And the fact that the region here is busy. There's a very solid, positive pipeline. So I'm sure we'll start to see more and more perhaps move this way.
So this was the Q1 market report, 2024. So I'm sure you're already deep into the Q2 market report. It's been really fascinating and inevitable, if you ask me, the discussion ongoing in Saudi Arabia. So, for example, the Minister of Finance, Mohammed Al-Jaddan, spoke last year about rationalization. We're going to be making choices about projects to move forward. We're going to be adjusting timelines. We may be stopping things altogether. We may be pushing other things forward, but I'm telling you, we're analyzing everything. And there's now additional reports that Crown Prince Mohammed bin Salman has set up a team to really start making hard decisions about these things, which again, as I referenced in deficit spending and they've already been into debt markets at enormous pace this year, trying to maintain this momentum on Vision 2030 projects. As you're looking now, when you come out with your next report, are you trying to determine to what degree this rationalization will impact the contracting sector?
Internally, we're just looking at there's been a pushback on some of the programs. Obviously, we're just trying to plan as well as a business. But I think we wouldn't necessarily report on that change. I think they're very committed to what they've announced and what they've said they want to achieve by 2030. And that might push back beyond. But I mean, some of the programs, I think the international media sources do like a bit of negative news. So I think they were quite quick to pick up on perhaps some of the bigger programs that were announced, and perhaps it was phrased in a slightly more negative way. But I think some of the programs were always going past even 2050. So it wasn't like they were trying to do everything in the next 6 years or, 8 years from when they announced it, perhaps. But it's interesting to see, whether some things will fall back or what they're going to prioritize. Obviously, they've now won Expo 2030 and the Winter Games up in Tabuk in Neom as well. So there'll obviously be a prioritization of projects, and they've got to obviously look at what's available in the market at the moment as well in terms of contractor capacity and consultants support and things like that as well. So
I think that's just an important point you just made about that Vision 2030. Vision 2030, the actual chronological year 2030 is a point in time. It's a target. It's intended to be a benchmark. It's not intended to be the close. And I do. You talk about international media and other commentators. I'm always concerned that, someone will make a judgment that X percentage wasn't completed, therefore it's a failure, which is an absolutely silly way to approach it. The extraordinary changes, foundational, fundamental, regulatory, judicial, all the things that make these things possible, before you have the investment and the contracting and the real movement, is meaningful change. You way back early on, you talked about economic diversification. Can you? And this is definitely off track, but ultimately, this is what Saudi Arabia is trying to do.
Mm-hmm.
Do you have an opinion on how they're progressing in this regard?
I mean, you mentioned it as well in terms of the oil price at the moment, because obviously we know that the oil price needs to be around the $100 a barrel. And obviously it's not reached that at the moment, and it hasn't been like that for quite a while. So I think if you look at the efforts they're going to, and they're still proceeding with these projects, despite the fact the oil price isn't, as strong as it was or as high as it was, and you look at what we're facing in terms of the headwinds globally and regionally, the projects have not been cancelled. They're very much still live. They're progressing. We know from MEED Projects what's being awarded, or maybe some have been put on hold or delayed slightly, but they haven't stopped everything altogether. It's still very much, what they announced, what they said they were aiming to do, and we're seeing that from the UAE as well. I mean, the UAE obviously have developed the country of the Emirates over the last 50 odd years, and Saudi are trying to do a considerable amount in a much shorter period, but they're doing it. They're moving forward. We're working on a lot of the programs. We know many other our competitors are as well. So we know that it's a busy market.
That counter-cyclical budgeting, I think, is essential, and to me is a reflection of a mature and strategic and far-reaching approach. When this, and on the 966 we've talked about it, but I always felt like, obviously, Saudi Arabia's in a moment, money was flowing in, grand projects, that sort of thing. What are they going to do when they hit their first deficit? And then the next one. And what they've done is continue to spend, which is what you do if you want to maintain that economic momentum.
Sure.
Laura Morgan, JLL, really appreciate you joining us. Is there anything we missed?
I think we've covered quite a bit. I'm just trying to think now. I mean, obviously we acknowledge that it is a turbulent time. I just think the market and what we've seen happen in the last 4 years, I just don't think we can, we can't sugarcoat it, but we also can't, not acknowledge the fact or disregard, what we're trying to face at the moment. Even as companies, without looking at construction companies or without looking at clients as a whole, it has been a challenging market. And I feel like every few months we've been faced with something else, and there is a lot going on. We're all trying to face the battles of the high inflation at the moment, although we seem to be in a stronger position in the likes of the UAE and Saudi. But we obviously do have a reliance on external markets, and that is a consideration. But I just think, it's a really exciting part of the world to be working at the moment, and we're seeing some absolutely amazing projects coming off the ground. So I think, it's positive, but it is also a very challenging market. But yeah, it's an exciting time to be working in the region, that's for sure.
The 966, myself, our listeners really appreciate you joining us to share your expertise. It's been really informative, and I hope we can get you back on sometime.
I would love that. Thank you so much for having me.